You're staring at 3 monitors. One's showing crypto, one's a brokerage dashboard, one's a Discord full of people screaming buy, and somehow you still don't know what to do. Here's the thing. The first Wall Street traders didn't have any of that either. No screens, no algorithms, no Bloomberg terminal, just a dirt road, a wooden fence, and a tree. And somehow, in about 6 months, they built the system every stock market on Earth still runs on today. So what did they actually do all day?
In 1792, a historian named Joseph Blunt documented the daily activity of brokers operating in Lower Manhattan. What he found was so low-tech it almost sounds like a joke. 24 men, one agreement, written by hand, under a tree. That tree was a Buttonwood tree, a sycamore, on 68 Wall Street. And the agreement those 24 guys signed said basically 2 things. We only trade with each other, and we charge everyone else a minimum fee of 0.25%. That's it. That's the founding document of American finance. Today, you sign 47 screens of terms and conditions just to open a brokerage account. They did the whole thing in 1 paragraph.
Now, you might be thinking, okay, it was 1792. How hard could trading a stock actually be? Fair. Let me show you what their actual morning looked like, and then tell me it sounds simple. Because the chaos wasn't in the technology. It was in the trust. There were no regulations, no enforcement body, no government backstop. If someone didn't pay you for a trade, your only option was to tell everyone else in the group and get them blacklisted. That was the entire legal system. Your reputation wasn't just important. It was your entire net worth. Blow one trade, and you weren't fined. You were finished.
Before the market even opened, brokers met at a coffee house on Water Street, Tontine Coffee House. It was part stock exchange, part rumor mill, part fight club. If you weren't there at 8 a.m., you missed the actual market. There was no central ticker, no price feed. One person would read ship arrival times from the newspaper out loud, because cargo ships determine commodity prices. If a ship from London arrived carrying cotton, cotton prices moved right there, verbally, in the room. The entire New York market in 1792 had 30 things you could buy. Your average brokerage app today has access to over 8,000. Some brokers hired runners, young guys who would literally sprint from the docks to the coffee house when ships arrived. The runner who got there first gave his broker a 30-second edge on the price. That was high-frequency trading in 1792. You paid a teenager to run faster than the other teenagers. Then there were the government bond auctions. The U.S. was still paying off Revolutionary War debt, and those bonds were the hottest asset on the market. Brokers would literally mob the treasury steps when new issuances were announced. Imagine a product drop, but the product is national debt, and everyone's in a top hat.
Okay. Let's walk through a full day. You are a broker. It is 1792. You wake up at dawn because there are no curtains thick enough to block the sun, and also nobody invented snoozing yet. First thing you do is check what you heard last night. Rumors travel at dinner party speed in 1792. Somebody's uncle in Philadelphia told somebody's cousin that the Bank of the United States is about to issue new shares. You don't know if it's true. Nobody does. That's the entire information market. You get to Tontine by 8. The newspaper reader is already going. Ship arrivals, commodity prices, any political news out of Philadelphia, because Congress meets in Philadelphia, and Congress moves markets. You are essentially a human information aggregator in a coat. Then comes the actual trading. And this is the part that breaks people's brains. There was no building, no floor, no exchange. They stood outside, under the tree, in the weather. Rain, snow, summer heat, all of it. Just stick figures in frock coats shouting numbers at each other on a dirt road next to a wooden wall. A trade worked like this. You say a price, the other guy either takes it or counters. You shake hands. That's legally binding. No confirmation email, no settlement notification. Your word in front of witnesses is the contract. By midday, if the morning went well, you were done. Seriously, the active trading window was roughly 4 to 5 hours. After that, you ate, you talked, you walked, you went back to the coffee house and gathered more information for tomorrow.
The afternoon wasn't rest, exactly. It was intelligence work. Who was buying what? Which merchant had gone bankrupt overnight? Which ship hadn't arrived yet, and why? You were building tomorrow's edge with today's conversations. Then came settlement. Today, when you buy a stock, it settles in 1 day. Automatically, digitally, invisibly. In 1792, settlement meant you physically walked to someone's office and handed them money, or they handed you a paper certificate. By hand, that day. If you didn't show up, the trade was in dispute, and disputes got you banned from the group. Evening was the real intelligence market. Dinner, taverns, the governor's social events if you were well connected enough. This is where the actual information moved. Not in the trading, but in who you sat next to at dinner. In 1792, your dinner table was your data subscription. Before bed, you updated your personal ledger. Who owed you what trades were still unsettled, what you'd heard that day that might move a price tomorrow, and then you slept. Not well, probably, because half your net worth was in verbal agreements with guys you'd known for 3 months.
Then, about 25 years after those 24 guys signed a document under a tree, something changed. They moved indoors. In 1817, the group formalized into the New York Stock and Exchange Board. There were now rules, a president, membership fees, dues, a roll call. The president would literally read every listed stock out loud twice a day and take bids in order. You had a seat, you had a number, your time now belonged to the system. And once the infrastructure existed, the acceleration was one way. Telegraph meant prices moved faster than humans. Ticker tape meant you didn't have to be in the room. Telephone meant the room could be anywhere. Computers meant the decisions didn't have to involve you at all. Each upgrade made the market faster, more complex, and harder for any individual to understand. In 1792, the whole US equity market was 30 assets and 24 people. Today, a single algorithmic trading firm can execute more transactions in 1 second than those 24 men did in an entire year. We didn't upgrade the market, we replaced the humans inside it. You're staring at those 3 monitors trying to find an edge. Trying to decode a system so fast and so complex that even the people who built it can't fully explain it anymore. The first Wall Street traders had none of your tools. No data feeds, no AI, no real-time anything. And they built a functional market on handshakes, shoe leather, and dinner table gossip. They weren't working within a system. They were the system. You're not trading differently than they did because you're smarter. You're trading differently because the machine got so big it swallowed the whole original idea. 24 guys under a tree just wanted to know the price of something, and that's still all any of us actually want to know.